Christina?
Okay, so we've talked a lot about low inventory and multiple offers coming in. Do I need a cash offer to win a bidding war?
Christina, we really don't. Matter of fact, that's one of the big myths that in a competitive market like what we're seeing, where there's just not enough homes for sale, there's a strong demand for real estate, you really don't need a cash offer. It's a myth that all the offers that are coming in that are getting accepted are cash. Most of them, statistically, have some version of financing. The challenge, Christina, is that when somebody writes an offer, they're used to making an offer like they might do for any other product, right? So you go to the grocery store and you grab something and you take it to the cash register and you're expecting to pay the sticker price, whatever the price tag was on that item, whether it be a new pair of shoes or shirts or jeans or something at the grocery store. Or, even if we went to a car dealership, you would expect to get a better deal than the manufactured sticker price, right? The sticker price that's on the windshield, you're going to expect to get a better price than that. You're going to negotiate them down. There's no way you're paying market value for it. And yet in real estate, because of the competitive nature, we're actually seeing most offers that come in are exceeding, are higher than the list price. And so it goes against our grain. We set out to go get a great deal, if you will. We think, let's negotiate this, let's get a better price. And those who are winning in today's real estate market understand the competitive nature, understand how competitive real estate is and the true value of real estate. And they're making those adjustments accordingly. And usually on our team, we use what we call an incremental strategy. So based on how many offers that are coming in, we have a pretty good understanding of where our offer amount needs to be on that property. Doesn't have to be cash, but you do have to have a great pulse on the real estate market to win today.
Well, you just mentioned too that multiple offers, which is driving up the price. So how many offers are you seeing per house? What's kind of the average?
It's very, very common. We'll see anywhere from 8 to 12 offers per property. And those offers are on average, averaging between 8 and 12% above the list price. And so that's kind of why I think there's a sticker shock in real estate. They see the price tag, they make an offer, and maybe their offer isn't accepted and they bid the exact amount that the seller was asking. Well, the nature of real estate is that the value of real estate is really what a buyer's willing to pay for it. And so when there's multiple buyers and a buyer's willing to pay more than the previous buyer, then that becomes the final sales price of the home. So what we're finding is that a real estate professional or a real estate team that has a pulse on the local market can give you that guidance and advice of when you need to extend your offer above the list price or above the price that you might see online, and when you can actually come in and purchase the property less than the asking price.
And the last time we saw a market that was this unusual was probably in 2008. And that's when there was a lot of foreclosures. And now we're seeing a lot of people having loss of jobs, loss of income. So are we going to see a rise in foreclosures like we did back in 2008?
Well, Christine, I think we actually have a slide on this one. And, the elephant in the room is, are we heading for a bubble? That's what people are thinking. Are we heading for another bubble? Is the real estate market going to look like what it looked like, 12 years ago, 13 years ago? There's our slide. And the truth is, we're not headed for another bubble. We don't have the aggressive mortgage products. Do you remember the pick a payment loan?
Right.
Do you remember the negative amortization loan? Do you remember those that were buying a property with no money down? That's pretty uncommon, all of those today. Today, it's pretty conventional to have a 30-year fixed mortgage. Some of our clients are even using these low interest rates to get into a 15-year fixed mortgage. But this is a chart that came out that we're watching very, very closely. And this is a percentage of foreclosures. And what we're specifically looking at is what we call notice of defaults. So when a homeowner misses more than 3 payments, their lender can, they don't have to, but they can file with the county recorder a notice of default. And so if you notice that we go back to 2009, 2010, 2011, we had a sharp increase of these notice of defaults, homeowners that were behind on their mortgage. And then it just steadily declined all the way till the impact of COVID really hit the real estate market, which was early 2020. We began to see an impact, and we began to see some of those foreclosure numbers go up, and actually they've gone up sizably. I don't know if you can see the screen here, but you notice in 2020 when we had a little bit of this recession, that's what this blue indicator is. We have a sizable increase in foreclosures. You say, well, are we concerned about that? And honestly, we're not concerned about it. How can we not be concerned about that as a real estate market as a whole? Because home values have risen so rapidly, most of those notice of defaults have massive equity in their property. And what we know is that when somebody has a significant amount of equity in their home, what are they likely to do before they go into foreclosure? What are they likely to do before there's what we call a notice of sale or a trustee sale? They're likely to sell the home. They don't want to give it back to the bank. They don't want to foreclose. And so the notice of default is a little misleading. Matter of fact, if you look on certain websites, they'll make comments like pre-foreclosure. And they're referencing this red line that you see and this increase. Well, if somebody has a pre-foreclosure, it's not a foreclosure yet, it's pre-foreclosure. They have a myriad of options, don't they? I mean, they could sell the property, that's one option, and capture the equity for themselves. They could make up the payment. Today, they could enter into some kind of forbearance program, which is very, very common today. Matter of fact, I would argue that the bulk of that red line that's climbing northbound, beginning in early 2020 during the start of COVID, I would tell you most of them have done some form of forbearance and now come out of forbearance and they just haven't caught up. Truthfully, my opinion has been that the forbearance was not done in a way that was sustainable. It simply deferred 3 months of their payments. And then after the 3 months, they owed all 3 months of that mortgage. If somebody is having a difficult time making one mortgage payment, then why stack 3 of them on at the same month, right? And so we believe that these foreclosures that we're seeing sizable increase are likely to dissipate within the real estate market because of the massive equity that they have. And as they find solutions other than foreclosures, we don't think that they'll actually enter the foreclosure market. Matter of fact, if you look at what's on the market today, it's a very thin slice of foreclosed properties and hardly any short sales. The nature of a short sale is that they're short. They don't have enough money to cover their mortgage payment. And that doesn't exist today when we have such massive appreciation.
So how will the eviction moratorium impact the real estate market? We've been talking about rental properties too in the past and investment properties. And so a large part of our audience are also real estate investors. So can you share a little bit about that too? Because that's interesting.
Well, let's talk about what it is. So the state of California rolled out an eviction moratorium, and they did this in May of 2020. And it was designed for those that were impacted by COVID, tenants, that landlords could not foreclose. And then with COVID, we saw courts close to a process called unlawful detainer, which is an eviction process that people go through. And there were no sheriff's writs or there were no evictions that were occurring, or very few. Very difficult to get an unlawful detainer in the courts today to evict a tenant. This moratorium that existed for these for eviction was extended, and it's extended till the end of this month, June 30th. So we're going on about 14 months now of eviction moratorium. And to me, this is one of the big question marks about the future of our market. How does the evictions that are coming, how do they impact our current real estate market? And there's a lot of uncertainty there. Because, we just looked at a slide, Christina, about homeowners that were behind on their mortgage payment.
Right.
And we can track that. We can track that because there's a notice of default that's filed. But Christina, how do you really track when a tenant is late on their rent with a mom and pop landlord? And that's the bulk of landlords, by the way. The bulk of landlords are mom and pop landlords. Usually somebody who lived in a home, they needed to move, they decided not to sell it for whatever reason, they kept it, they rented it out. And that's the bulk of our rental market today. Well, that is not as organized. And so we really don't know. It's a mystery. It's kind of a gray area of the real estate market because it's really not quantifiable at this point. Now, eventually we may see evictions occur. We may see unlawful detainers. We may even see sheriff lockouts that occur. And those are things we can track because many of those things are publicly recorded documents and we can get a pulse, but we don't know. And so this is one of the uncertainties of today's market that's just really difficult to put our pulse on. If we take it a step further, we look at, well, what options do tenants have today? Well, we talk a lot about the real estate market appreciating, how fast home values have risen. But Christina, one thing that you and I rarely talk about, rental property rates have climbed rapidly. And so what happens I think in this environment is there's just not a viable alternative. It's not like you can move into the home next door and pay a discounted rent. That very rarely exists in today's market. And most landlords have not kept up with market rate rents. And so the alternative isn't a lower rent, but the alternative is actually a higher rent. So I believe that a lot of these evictions that we may be looking at with the conclusion of the moratorium effective June 30th of this month. So we've got another, 4 weeks away. I think what's going to happen is a lot of it's going to get worked out. And the reason I think a lot of it's going to get worked out is just that tenants don't have another place that they could go to at a discounted rate. And in addition to there not being enough homes for sale, there's not enough homes for rent right now. There's a lack of housing. California, most people don't know, a couple of years ago, California enacted a California housing inventory crisis. It's not a real estate crisis, it's an inventory crisis, specifically that we just don't have enough homes, whether it's properties for rent or properties that people own. We just don't have enough of them available to meet the demand today.
And you always talk about supply and demand. So we have a high demand and a low supply. So prices are sky high. I mean, rents are the same, if not more, than a mortgage.
Yep.
So yeah, it's just
that's why I think a lot of what we just looked at, there is some uncertainty. There's some gray area, and there's some things that anything I would share in that regarding evictions would be speculation at this point.
Okay.
We just don't have a pulse because it's not as well documented. It's not as well quantifiable. There's no tracking system that exists when a tenant's been 1 month or 2 months late or even 3 months late on rent. And the homeowner has not filed an eviction because of the California eviction moratorium. So there's some uncertainty there that exists of what really is happening in the rental market amongst tenants that are utilizing the California eviction moratorium. And we just don't know. We'll have to see how that plays out.
And so let's go a little deeper into inventory. So we saw that inventory levels are down 30.1%. So, I mean, I know you don't have a magic ball, but how long is this inventory crisis going to last?
Well, I think, Christina, we have a slide on this one, don't we?
Yeah.
I think a picture is often worth 1,000 words, and that probably could not be any truer than this slide we're going to show you. Christina, can we expand that a little bit? There we go. Thank you. All right. So take a look at this with me. Let's go ahead and scroll down just a little bit. So what are we looking at? Actually, go ahead and scroll up. I apologize. So we're looking at the relationship between homes built by decade. Okay, number of homes built. And these, by the way, are in millions. And this is a U.S. Census stat. So this is a national stat versus population growth. Now look in 1990, maybe we were well, let's even go back to the 80s. In the 80s, we were probably pretty close to building the right number of homes. 25 million homes built, 23 million in increased population. In the 90s, did pretty good. 2000s, we began to lose traction. The relationship between the growth of population growth and number of homes built is now beginning to separate. There's a discrepancy there. And so we see there's 27 million homes built, 32 million is the growth in population. Check out what's happened in 2010s. So from 2010 to 2020, 6 million properties have been built, and the growth of the state has been 27 million. So here's the most common question that I'm asked. Rick, when's the market going to change? When are we going to see a flood of inventory?
Right.
Rick, when is the home values going to drop so I can swoop in and buy a dozen homes or my first home? And I would tell you we have a ways to go. From the early 2000s to present, we are not building enough homes to meet the demand. And this is why we see markets where the inventory is off 30%. In some markets, it has half the number of homes for sale that we did a year ago. And this chart, I think, really helps articulate that from the U.S. Census Bureau. We're just not building enough homes to meet that demand. That's going to take some time. That's been a 20-year deficit.
Wow.
It's not going to change overnight. And so it's why we keep seeing economists revise their appreciation targets. They believe that home values will rise. And every month that I receive a new opinion of where they think the market's going to go, it's not reduced, but they think it's going to have greater appreciation. Really, this is a national thing, and it's occurring across the United States. Most communities do not have enough homes for sale. Most states are 40 to 50% down in inventory. In addition to a boom in births that we saw in especially over 30 years ago, we began to see some births. The average first-time home buyer is 34 years old. And so we see demand, we see lack of inventory or supply, and this is why we see rapid price appreciation.
And we have another slide too. Did you want to show the cost
let's
of
look at
building
it.
too?
So why else are we seeing, what's with the 6 million homes being built, across the country? Look at the cost of lumber. Now, I think there are 5 factors, and this is one of them, okay, of why we have low inventory. And this is I picked this slide out because I think that this is a very demonstrative slide to kind of really articulate what's happening. And I think lumber is really the microcosm of what's happening amongst the whole house, right? I mean, it's not just lumber, but it's cabinets, it's flooring, it's windows, it's roofing material. So what we know is that the cost of lumber, let's look at 2010, $270, okay? May of 2015, $234, began to jump, $343 in May of 2020. Now let's look at what it's at in May of 2021. It has increased by over 377%. Now, Christina, how much lumber do you think's in your house? How much lumber did they use to frame it? How much lumber did they use in the roofing material or in the floor joists or the roof rafters or the barges, the exterior wood members and the siding? There's a lot of lumber in your house. And what we know is that 1 year ago, $50,000 could buy a little more than 10 houses worth of lumber. Today, that same $50,000 would buy you a little more than 2 houses worth of lumber. So one of the reasons why we see so little homes being built is the cost associated with lumber. Lumber specifically has climbed astronomically. You know, there's a meme going around right now, and it's a spouse that says, "Take me out to dinner somewhere expensive." And then the follow-up picture is they're sitting in the lumber yard having dinner. That's a very expensive place to go out and have dinner today,
Yeah.
the lumber yard, right? And it's the cost of lumber is growing astronomically. I was at a Home Depot not too long ago. I saw that a 4x8 sheet of CDX exterior plywood was over $100. It's just climbing astronomically, and it's why
Wow.
we see few homes being built. This factor is affecting even new home construction, and some of the new home constructions are beginning to put in what we call accelerator clauses to say, hey, look, if lumber rises, you may pay more at close of escrow for your house as a result of the lumber price appreciation. And so this is one of the main factors of why we're seeing so little homes being built.
You know that we just sold our home and we're having our home built, and
Yep.
yeah, our baseboards went from 5.5 inches down to 4.5. And I mean, it's expensive times to be a termite these days. I don't know. It's crazy.
Next thing you know, you'll be at that 3/4 inch reversible oak baseboard. Do you remember that in the 1970s home?
Yeah, and we're going to start washing our toothpicks. I mean, times are rough. Those skewers. So, okay, with inventory, Zillow estimates that 6.61 million existing homes will sell this year. So, new homes are going up. How about my existing home? Especially, like we said, supply and demand. What can I expect with selling my home?
So, Christina, at the beginning of the year, you and I did what we call a market update and a state of the market. It's online. You can watch it. It's at ricksmarketupdate.com. And I had shared with you at that time that the Association of Realtors and a lot of the people that I listened to very closely, they thought that home values would rise between 6 and 8%. And at that time, I said, I got to be honest with you, I think they're way off. And I think it's going to rise in the high teens. I think it'll be 16 to 18%. I think they're at least 10% off. And now I'm even thinking I was low. I think home values in today's market are going to rise year over year over 20%, especially in the markets that we serve, which is the Bay Area and Sacramento County. We've got 5 offices throughout there, and I believe that your home a year ago was worth 20% less and worth 20% more today than it was just simply 12 months ago. And I think that's going to continue for some time because we looked at that a number of homes for sale by decade. We got 20 years of deficits that's been created. Some could even argue longer than that we just didn't build after the crash of the market in 2006, 2007, 2008. We just didn't go back to building enough homes. Matter of fact, we stopped building altogether. Now I see bulldozers out everywhere. I see cranes everywhere I turn. There's dirt being turned in fields that I never thought dirt would be turned in. And so we're seeing it, but it's going to take some time. And especially when you combine some of this lumber costs and how that's impacting home building. You know, Christina, I wonder, there's going to be a record number of sales that occur in the United States, across our country. More homes have been sold, and I think we're going to see an unprecedented price appreciation, something that we've never, ever seen before. I think we're living in uncharted times. These are uncharted waters. This is unprecedented what's happening in the real estate market. For years I've said not owning real estate is hazardous to your wealth. It's never been more true than what it is today. And I wonder what would happen, especially with the number of sales that are going to occur, if we actually had the properties to meet the demand. Remember, the 616 million homes that are going to be sold has all happened with not enough homes available. So there's been some bottlenecks, there's been some resistance, there's been some So there's just not enough homes for sale, and yet we're seeing 616 million homes sold across the country. And I wonder if there was actually enough homes to choose from, we would probably have significantly more sales.
Mm-hmm.
And we're arbitrarily low as a result of we just don't have enough inventory.
Mm-hmm. And summer has always been the popular time for real estate. Kids are out of school. It's a great time to move so they can start a new school. And so, can you just kind of compare what a normal market would look like and what we can expect? I mean, a lot of us have kids who just got out of school. So, what is the summer going to look like compared to a normal summer for real estate?
Well, let's look at what a typical seasonal real estate, real estate is both seasonal, like annually based, but then
Okay.
also it's very cyclical in nature. So every 7 to 10 years, we see market cycles of prices appreciating and depreciating, usually based on supply and demand.
Mm-hmm.
But we also see seasonal changes. For example, most people start looking to buy a home when their kids get out of school. And
Yeah.
literally, that's happening right now as we speak, right?
Right.
So kids are final days of school. My daughters, their final day of school was yesterday. They did a field trip today and they're done. And they start thinking about and making that relocation while their kids are on summer break.
Mm-hmm.
And so that tends to be the bulk of the season. I find that the number one month, or there's more sales than any other month, is the month of August, as a result of they entered into contract in June and July, and they were looking for property and trying to find that new home and that new community, and want to transition schools outside of the middle of school season. And I think that there's going to be those seasonal changes. And then we also go to the end of the year and we say, well, less people are shopping for real estate the week of Thanksgiving, the week
Mm-hmm.
before Christmas, the week after Christmas. I mean, these are statistically, there's less activity in the market. But I think all of that, Christina, takes a back seat to what's happening today. I
Okay.
think that primary seasonal change of real estate is still going to be there. It still exists. There's nothing that's changing that. But the major factors of real estate, I think there are 5 of them. These 5 factors are taking the front seat. They're kind of kicking out seasonal real estate to the back seat, and they're taking the front seat, and they're driving this market and may drive it for the next several years to come. Number 1, low inventory. We talked about that.
Mm-hmm.
There's just not enough homes for sale, both for rent, not enough homes for sale. There's not enough homes to meet the demand. We've talked about that. Number 2, the cost of lumber. We looked at that, the cost associated with product. Number 3, let's look at what happened 34 years ago with the birth of people. There was more births 34 years ago. There was a spike. Guess what our average age of a first-time home buyer is today? 34 years old. The biggest slice of the pie in real estate today is for the first-time home buyer. It generally is. First-time home buyer is the biggest slice of that pie. Let's look at another factor that I think has moved the seasonal real estate to the back seat and is really driving this market. Another factor is what we would call labor impact. So look at what's happened with labor. There's just not enough roofers. There's not enough contractors. There's not enough flooring contractors to meet the demand. We're seeing massive growth, and there's not enough skilled labor journeymen in the market to meet that demand and build those houses. And it's one of the reasons why we often see new homes get delayed.
Mm-hmm.
They aim for a certain date and they just can't get it done in time. And the last thing, and we would be remiss to not mention this, is interest rates. Look how low these interest rates are. And we expect that they're going to stay low for at least another 6 months to a year. We're anticipating that the interest rates are going to stay low. And that allows people to do several things. One is it allows them to be able to buy more of a home and keep a smaller payment. It allows them to convert from a 30-year mortgage to a 15-year mortgage. A lot of our savvy investors are doing that. They drop in the 30-year, they're going to a 15-year, they're saving themselves hundreds of thousands of dollars of interest over the course of the life of the loan, and they're paying it off 15 years early.
Wow.
And so I think these 5 things have a greater impact today than the seasonal changes of real estate, although those seasonal changes of real estate still exist. But I think that they're secondary to what's really happening with our inventory, our demand, our cost of lumber, our supply chains that have been impacted. I tried to buy a refrigerator about 3 months ago, and I just needed a basic refrigerator, nothing special. And I could not find a refrigerator in stock. And it actually took me about 4 weeks to find a refrigerator that could be delivered. They're just, warehouses were closed. COVID was impacting the ability to have workers on the product line. And so it's hard to get a refrigerator. It's hard to get a microwave. It's hard to get a stove. Then we multiply that for a new home: roofing material, flooring material, windows, doors, etc. All of that's impacted.
So right now we're broadcasting on Facebook Live. So most of the people watching are actually clients who want to buy or sell a home, and they want to know what they should do. So can you tell us a little bit about what expectations should a buyer and seller have in this market? Should they wait until things calm down? Are they not going to calm down? Prices, are they going to go up? Can you just give us a little overview of what they should expect?
Not owning real estate will be hazardous to your wealth. We have a fundamental economic shift occurring. It is I think it'll be so significant that in the future, it'll be hard for individuals to buy their first home. It is outpacing wages at an astronomical level. So what should a buyer expect today? Buyers should expect to purchase in a very competitive market. And they say, oh, no, I don't want that. I don't want to compete. I want to be the only buyer. No, you don't. Let me tell you why you don't want to be the only buyer. If you're the only buyer and there's lots of homes to choose from and nobody else is competing, when you close escrow and you move into the home and you get it set up just the way that you want, that lack of demand for real estate will cause prices to drop. You want to buy in a competitive market. I know there are frustrations and I know there are challenges, and you may not get every offer that you make accepted, but that's the market that you want to buy in. That's the market that's healthy to own real estate in. The market that's appreciating is the market that you want to benefit from as a buyer. So one of the things that I hear people often say is, Rick, I'm just going to wait until the market crashes. I'm going to wait until the market hits rock bottom. Then I'm going to enter in. I'm going to wait until homes are at a discount. Then I'm going to buy a property. I think that's a fundamental mistake in today's market. We just showed you that 20 years of inventory is lacking. Those that told me that last year are so disappointed in markets that climb 20, 30, even as much as 40% the home value over the course of a year. And they missed out on that opportunity to own real estate and have it appreciate. There's some statistics right now that just came out that in one of our counties, we have about 9 counties that we serve. In one of our counties, Contra Costa, where we have 3 offices, the median home value is $10,000 away from being $1 million, $990,000. And it climbed over $200,000 over the course of the last 12 months. And that means that if you owned the median home in Contra Costa County last year, and you did nothing, you did absolutely nothing to it, it was the median home, the average property in the community, it likely climbed over $200,000 over the last 12 months. So those that said, I'm just going to wait, last year they said, I'm going to wait, I'm not going to buy, I'm not going to engage in the process, I'm going to hold tight, I'm waiting for the market to change, waiting for the market to crash. They lost out on $220,000. Most people didn't even make that working 9 to 9 every day, right? But they made it owning real estate. That's why I always say not owning real estate is hazardous to your wealth. Because when you own real estate, you are the ultimate guard against inflation. Matter of fact, what we're talking about, isn't it inflation of real estate? The difference is those that own real estate bought in at a certain price. They locked their property taxes at another certain price. That's how Prop 13 works. And then they got a mortgage that was a fixed rate mortgage, and they locked in. And so when the home values rose, they had the ultimate guard in inflation because their costs did not rise. And so I think now's a great time to buy. It's a great time to invest in real estate. Christina, you've been with me in times where I've said, it's not a good time to buy. Or it's not a good time to sell. I'm not one of those guys that, hey, anytime it's a good time to buy or sell. I really think that it's a great time. We have a perfect storm that exists today that's likely to continue for a period of time, for a solid period of time, where we're going to continue to see rapid appreciation. We're going to continue to see not enough homes for sale, which is driving up home values. And we're going to continue to see low interest rates. It's really a perfect environment to own real estate, invest in real estate, buy rental properties, vacation rental properties. I can't think of a better time in my lifetime to own real estate than now.
One thing that you said that's really stuck with me is if you wait today and you want to buy a 3-bedroom, then next year you're only going to be able to afford a 2-bedroom. Or if you want to buy a standalone house, next year you may only be able to afford a condo.
So true. I remember my grandfather tells a story about walking into a property. I think it was probably in the 50s or 60s. And it was in Concord, California. I believe it was on Concord Boulevard. They had an open house and they wanted $5,000 for that home.
Oh my goodness.
And he left and he said, there'll never be a home that sells in Concord for $5,000.
Wow.
Today, I'd say, Grandpa, you should buy the whole street for $5,000, right? Today, that home is probably well over $1 million.
Wow.
And so real estate continues to rise. Unlike cash or currency, we can't just keep printing it. We have a limited amount of real estate. And especially when we look at high populated areas, so the Bay Area, the greater Sacramento region, close proximity to employment, there's only so much of it. There's only so much dirt. And so as populations continue to grow around the world, we see a need and desire for real estate that's causing the value of it to continue to rise.
So final question, we've talked a lot about buying real estate. So what if somebody wants to sell their house in this market? What should they expect, or what obstacles, or even, we still have some COVID regulations in place at this moment in time. What are some things that sellers should expect?
You should, if you're thinking about selling your home, you should expect that you will not have to do many of the things you think you need to do. You probably, as a homeowner, and I'm the same way, I walk through my home and say, I got to do that, and I got to do that, and I got to do that. And if I ever to sell, I would want to do this, that, and this. And when I'm meeting with homeowners on a regular basis, and it seems like almost every day I meet with a homeowner or talk to a homeowner, or certainly one of our team members do, I'm telling them you don't have to. You don't have to. Save that cash, save those dollars for your next home. You don't have to replace that fence. You don't have to go and do additional improvements to your home. You don't have to pull out the tile and put in granite. You don't have to pull out the carpet and put in hardwood floor today. You don't have to do that to reach 100% that the market will bear for your home. And that's only because of the unique dynamics that exist. I remember telling certain homeowners many years ago that we had to put in granite countertops, or we had to replace the flooring, or we had to make major upgrades in the bathrooms and kitchen. And today I'm limiting it just to a handful of cosmetic things that most people need to do, and they're ready to go. And most people say, oh, I expected it to be so much more. I expected to do so many more things to sell my home than what you're telling me. You can do them, but you'll probably get the same price regardless. You can already achieve 100% market value with putting limited effort and focus into your property. There's actually 5 key things that we've discovered that if you do them, you get the highest possible price in the least amount of time with minimal inconvenience.
Well, that's all the time we have for today. And all this information has been so practical and real. And there's so much noise. And this is such a truth. And it's just great hearing you say these things so that way we can have actions to them. So thank you for answering these questions that so many of us have. Next week, I'm really excited for this one. You came up with this idea of Rick's Pros. The market is crazy all over the nation, but especially in California. And a lot of people are choosing to move out of state. And so you're a national real estate coach. You have connections with hundreds, if not thousands of agents across the nation. We are picking the 10 hottest markets and bringing an agent from each market, and they're going to talk about their community, and you're going to see these awesome connections that we have. So if you're thinking about moving out of state, you do not want to miss our Rick Fuller podcast next week. So thank you for spending part of your day with us, and we can't wait for you to join us next time. Thanks, Rick.
Bye.